Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hello everyone, checking in on oil, starting with the hourly time frame. So drew this uptrend line a couple days ago and a couple videos ago, and it's now still acting as support. We bounced off of it 3 more times since drawing it, so certainly a valid trend line to be watching. And the bulls are remaining in control as we see a tightening range is forming, where we're going to see a make or break likely on Monday, with either a break over 54 resistance or a loss of this uptrend support. Now, why is 54 so important? Because of the amount of rejections. And we look at it on this hourly time frame, and we can see, well, the price got over it. How is it that resistance? And you have to zoom out to the daily time frame. Look at this level on the daily time frame: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 rejections where we have touched or gotten above $54 with the inability of the day to close above that level. This is an extremely strong resistance point at this point, and we're going to have to see the bulls close above it to be looking back at the recent high of 55.21. I do believe the bulls had the momentum in their favor, so I'm looking for them to do this next week. If we close above 54, we are heading up to 55.21, and if after that level, as I pointed out in some of these videos, the longer term weekly trend looking up towards 56.54 and then up to the low 60s. So I do like the potential setup that we currently have on oil for the long-term bulls if we can continue with this upside that we've been seeing pretty much all of 2016. So the question is now going to be, can we turn $54 into support before we lose this uptrend line? And if we do lose the uptrend line, it's not going to be game over by any means. We'll have all these support levels built on the way up to be looking at, but it's a nice tightening range to be watching heading into Monday. And we could even see a break in Sunday night's trading, as before we even wake up on Monday, we could have this level either broken in either direction. So looking at USO on the daily time frame, still maintaining control after that really tight range broke to the upside. The highest price that we've seen in the past about 3-4 weeks at this point is 1163, and we hit 1162 today. So now we have tops at 1163, 62, and 62. And if we get those levels as support, we see a bullish MACD cross and a bullish break of this tightening range. The weekly time frame is looking good, holding these moving average supports, closing up near the high of the week, and looking to head back up towards $12 with a break of 1163. So that's what we're looking at heading into Monday. Nice tight range to be watching, all about $54 resistance on the daily, and looking for continuation. A break of 1163 on USO will be bullish on the daily time frame. Thanks for watching. I hope you have a great weekend. We'll see you next week.